Check, check, quick sound check. Can everybody hear me loud and clear? Let's do a sound check. Hopefully I look good, sound good. Thank you everyone for joining. If we can get a yes in the chat if we can hear me. Good. Awesome, awesome. Audio's low. Let's try to turn that up a little bit. How's that? Is that a little bit better? Loud and clear. Awesome. Well, thank you everyone for joining. If this is our first time meeting, I am Coach Jay. Very nice to meet you. Thank you to Topstep for this opportunity to move this session to YouTube. We've been doing it in Discord for a little while. Welcome to At the Buzzer. It's our market recap segment. I am Coach Jay, normally accompanied by Coach Paul. We'll get Coach Paul on here in a minute. Just once we figure out a few technical things, Coach Paul will be joining us as well. But if this is your first time joining, the goal of this segment is to review what happened in the markets for the day. We're going to talk about, the major markets, the Nasdaq, ES, crude oil, gold, the four major markets that everyone is trading at Topstep. But we may also talk about, some markets that you have not traded before. What we believe is our goal as traders is to identify opportunity and see how we could take advantage of those opportunities while managing our risk. So we may talk about some markets that you have not traded. With that being said, anything we talk about is for educational or entertainment purposes only. Nothing should be considered any type of trading or investment advice. We will be talking about concepts. The one thing I do love about this session is that the markets are closed right now. So there's no trading going on. We can use it as a prep for what's coming up tomorrow or for the rest of the week, and just review what we saw in the markets for the day. The way we're going to start every segment, if you see up on the right side, I have a quote board. We're going to talk about the top percentage movers on the day. The reason we want to focus on these, like I said, there's opportunity in other markets, and sometimes these top percentage movers are these outside markets that we'll talk about. So to the downside, the first that I see, negative 1.48% is soybean oil. Don't know how many traders we have that have traded the soybean oil contract before, but down 1.48% today. Soybean oil trades around trades at $6 a tick. We have soybean meal down 1.74%, also $6 a tick. And we have micro Bitcoin futures as our biggest percentage mover to the downside. And I'll pull that up. 2.45% down for micro Bitcoin futures as our biggest percentage mover. What I like about these percentage movers, and we've seen this when we were running the Discord class, a lot of times, and we see it in the equities, right? When the Nasdaq has a 4% down day, it provides a pretty good opportunity for a reversal of that trend. So, keep these up, take some notes on these markets. If you have not traded it before, I'm going to suggest to do so in a practice account. Don't take any information that you hear, for the first time or for a market that you're not accustomed to, and set the expectation that you're going to make money with that information on the next day, right? So if you haven't traded micro Bitcoin futures before, maybe take a look at it tomorrow. We'll zoom out on this chart here and see what it looks like on a daily. Bitcoin has been... we had this gap down. It kind of trades like the equities. Coach Paul says that all the time. Bitcoin is going to trade more and more like the equity markets as more institutional money comes into it. Little bit of a balance day that we're seeing here in Bitcoin, where we opened lower than yesterday's open and kind of ended this daily candle as a doji. So decision-making area for Bitcoin, it's going to be affected by the same news that the equities are. So PPI tomorrow, CPI on Wednesday, going to affect Bitcoin as well. All right, to the upside, we have heating oil up 2.69%. We have micro Ethereum futures up 3.15%. And then, of course, we have crude oil up 3.67% as our biggest percentage mover to the upside. We know that there was the news overseas. I saw some news about, U.S. potentially sending troops overseas to the Middle East. That is going to expedite any moves that we see in crude oil. Up 3.68% today, did trade above $80 a barrel at one point today. Closed under it, but a pretty big move for crude and maybe the start of a trend if we continue to see escalations. Like Hogue always says, make sure we pray for peace. We don't want to see those things happen, but as traders, we embrace the volatility in the markets because it presents opportunity for us. All right. So we're going to go into the 4 major markets. We're going to start with the Nasdaq. Give me 1 second to pull that up. And when I go over charting, most of my charting I do on Quantower. I will start doing more on TopstepX as well, but if you guys have seen me trade before or analyze the markets, it's a lot of volume analysis, which I use Quantower for. That helps a lot with it. I'm going to go over some concepts. I talk a lot about Delta. You hear Hogue mention Delta on TopstepTV all the time, and basically what Delta is the difference between, simplest terms, the difference between market buys and market sells, right? It can get a little bit more complicated than that, but we'll keep it simple for now. And let's pull up the Nasdaq chart. Give me 1 second here. Most of my analysis, I start with a 30-minute chart and drill down from there. I trade on a 3-minute, but I feel like with a 30-minute chart, I can zoom out, get a higher time frame picture, and then zoom in as well. We are day traders. We do have to close positions by the end of the day, so 30-minute is pretty good for me. And what I'm seeing in the Nasdaq is balance. Balance, consolidated day. You heard about it all day on TopstepTV today. Not a lot of decision making going on before some of the biggest news of the week, right? We have PPI on tomorrow. We have CPI Wednesday. You're not going to see a lot of directional moves most of the time before these numbers. The one thing I wanted to start with was the last PPI print that we had in the Nasdaq. And that was on July 12th. So July 12th, here's our PPI print here. We did have CPI prior to the PPI print, but if we go to a daily chart, it kind of paints the picture for what happened today. The last CPI print we had was when we made all-time highs right below 21,000. The day prior to that was a 232-point range day on the Nasdaq when the daily ATR was 240 points, so just under an average day. The day prior to that one was 156 points. Again, the daily ATR was 254 points, which, telling us the market is waiting for some of this bigger news to come out. We're not going to see directional moves, and that's exactly what we got today. We know we have PPI tomorrow, CPI coming out on Wednesday. Today's range, in this expanded range environment that we've been seeing, right? A month ago, the daily ATR was 250 points. Today, that daily ATR is 600 points. So a range contraction day, 250-point day today was our average range a month ago. So we are in more volatile times. The summer trade it just doesn't exist, which is great for us, right? It's more months of trading, more months of volatility. But we've heard it, be careful in these months as well, where expanded ranges. You've seen Dakota trading micros. I would suggest it as well. Maybe if you're a Nasdaq trader, look at the ES with thin order books. But consolidated day, right? Going into big news, we expect consolidation. And why that's important to note going into the day, right? What type of day it might be. It's setting price targets for our trades. We'll go to the Globex Open. And shout out to Nick for a tick for the market prep yesterday. Really great content all over Topstep right now from Nick, Dakota, D, and the Daily Show is just phenomenal. But consolidation, right? I anchor a VWAP to the Globex Open every day, and that's the yellow line that you see on this screen now. And it's pretty flat, right? If you're a VWAP trader, you know that, sometimes we hear traders say, VWAP is not important or it's confusing. When the angle of VWAP is this flat, it's telling you that the market's in balance, right? So you want your trade location to be away from this anchored VWAP. If it was a angled VWAP, right? If it's a 45-degree angle, then that's when you're going to use it as a support or a resistance, depending on how the market is trending. But from the Globex Open, we didn't see much as far as direction. And that carried through to the New York session. I'm going to delete that VWAP for now. And we have the And again, I use the 3-minute chart, so 3-minute opening range here. And a decent trade to start the day. You know, we sell through this opening range within 2 candles. 6 minutes into the market, we have a really nice sell-off, 100-point move. It's crazy to say that 100 points is range-bound in the Nasdaq right now, but it is the market conditions that we have. Why I'm bringing this up is, you know, we set the precedent for what the day type was, right? Prior to news, we're going to expect some consolidation. If you're in this short, I think it's reasonable to set expectations for lower, right? We have a lot of space in this market down here that looks like it needs to be filled. But if we go with what the day type was, we have to manage our expectations for the outcomes of these trades and trade them differently, right? Maybe I'm trailing my stop more because I know that we're in a range-bound market and we're going to pop right back up eventually. We see the indicator that I have on the bottom of my chart here is called delta flow in Quantower, and we're seeing heavy negative delta as we're selling off, but then immediately after that, there's really no follow through. We consolidate, and the Nasdaq is the Nasdaq, so consolidation is still 50 points, which again, trade micros to manage your risk. But this consolidation here, coming off of that heavy negative delta, sets a low range for the day. I frame out my trades like this all the time based on these heavy delta numbers. And why I'm paying attention to those is because that's where someone decided to trade size, right? We don't know what the intentions were behind the trades, but some big selling came in here, and that selling was absorbed. And we can see, once we consolidated in it, closed above those prices, we start to trend higher. I want to focus a lot on executions and where we may be able to take trades. You can take this trade here where you might call this the low, right? But this could get in the realm of picking the bottom, trying to pick the bottom, right? We don't get to see the market like this. We get to see it this way. And at that point in the day, it looks pretty heavy. I think I even said it in the Discord chat to some of the traders. This market looks heavy, maybe looking for a sell. But once we get a close back above where this selling came in, this is now showing us that these are trap sellers here. The close above may be a higher probability trade where you're sacrificing trade location in order to get a confirmation that the market is moving in your direction for the long here. But it's a bit of a higher probability trade to me. I think taking this one down here, I would say it's probably a 60% trade because we saw no follow through. This is closer to like a 70% probability. Of course, outcomes are always going to be 50-50. We never put on any guarantees. It could be a losing trade. But this pattern I've seen play out often. Coach Paul will tell you when he gets on here. It's one of our favorite trades to look at. We see heavy delta coming into an area, no follow through. Once we get a close outside of that candle, a trend in the opposite direction, this is a beautiful trade, right? And we just consolidate. I have another chart up that I want to share. Give me 1 second. And it's actually where I get a lot of my levels from. So let me pull that one up. Give me 1 second. This chart is going to look confusing if you have not used Quantower before, but I'm going to explain it. We're going to be here every day of the week. So a lot of this stuff that we're talking about is going to make a lot more sense as we go through it. But I have, let's see, 4 charts up here. Left one is the ES, bottom here is gold, crude oil, and the Nasdaq. We're focusing on the Nasdaq one here. And what this is I have this chart up with what's called power trades on Quantower. It's where a lot of my levels come from. The daily levels that we put up on the Topstep daily level sheet, they come from these power trades, right? And what these are for the Nasdaq is a filter of 400 contracts traded in a 1 second period, which just tells me there's a lot of size being traded at a specific price. It meant something to someone. That price meant something to someone, so I want to mark it out on my charts. Now we can see where a lot of these power trades are all consolidated, some of them sell side, some of them buy side. It looks like a lot of positioning, right? Where we're not having these bigger trades and then moving away from it. They're all kind of overlapping each other, which just goes along with the trend that we talked about. One of the levels I think I had was 18,725, which came from, one of these power trades back here. Don't remember exactly which one it was, but yeah, framing these out gives us opportunity. If any way that you have to determine where volume has been traded, whether you're using Bookmap, whether you're using power trades, whether you're looking at time and sales and you're seeing the orders actually get executed, I think it's really important. We talk about levels all the time: supply, demand, support, and resistance. But those levels are that because there are traders trading there to make those levels, right? So if we can pay attention to volume, it's why I focus on volume so much. Bigger traders have intentions for the market, and they set a high 18,725. I can't recall exactly where I got that level from, but a lot of consolidation. You guys get the idea. Any questions on the Nasdaq before we move on? Going into tomorrow, I am expecting a little bit of consolidation because I think CPI is probably the more important number, and that's coming out on Wednesday. But I do want to review how I would look at that the PPI print coming out tomorrow, right? So our last PPI print was July 12th. And every time there's a news print, I'm going to trade it the same exact way. You'll hear us say all the time, you don't have to trade the news. You don't have to hold a position into the news. We don't know what the order books are going to do. They're going to clear out. But something I do to prepare levels for the day is wait until that newsprint happens. And we'll go back to give me 1 second. Let me switch my screen. July 12th. So this is the PPI print here. What I'm going to do, I'm going to frame out this candle at 7:30 Central tomorrow. I'm not going to trade during it because we can see this candle is 100 points in the Nasdaq. That's a $2,000 3-minute move, which most of our accounts cannot facilitate, right? We want to focus on risk management. Trading during this is it's dangerous. It's dangerous. There's a reason we say, don't trade it. There's a reason it was a rule at one point for Topstep accounts that you couldn't trade the news. But what this provides are really great levels for any newsprint. I'm going to do the same thing every day. I'm going to frame out that candle. I'm going to attach an anchored VWAP to it. And we can see it, obviously, in the price action that, buyers were in control of this market. But as we're holding these highs, we're seeing the anchored VWAP from that event leave the range. What that's telling me is that buyers are in control, right? As I see VWAP be supportive and leave the range, that's giving me an area where I can, look for entries, maybe limit my risk as the market trends up. And then, we get reversions back to VWAP close to it. We don't get it exactly, but that gives us good trade location. That's how I'm going to be trading tomorrow. All right. And we see another reversion to VWAP. It happens later on in the day, right? This is 12 o'clock Eastern time. We get a reversion to VWAP. It holds. Buyers are clearly in control still since this last print. Nice opportunity for another trade again through the rest of the day. Do you hold this entire trade? If your name is Rafa, you probably do. Great trading, Rafa, if you're watching. But it's an opportunity, right? We don't have to get the exact direction of the market correct in order to take a trade, right? If I wait for a reversion to VWAP and a bounce, it's a 50-point trade here. It's a 200-point move. And if you can capture anywhere from 10 to 60% of that, you're a real good trader. All right. So we got a couple quick questions. Justin Williams, I was up 11K today and lost 5 trying to long again. Any suggestions? Justin, well, first of all, good job being up 11K. If you lost the 5, you kept half of what you made. My question for you would be from the point you made that 11K, how many A+ setups did you actually see? Right? If you were trying to long again, right, this is a really choppy market, and maybe you're a great range-bound trader, right, where if your name is Dolby, lights went off, give me 1 second. If you trade like Dolby, this is a day where you could make that 11K, right? If you're a trend trader and you made the 11K on this initial move and you kept trying to buy it without identifying that it was a range-bound day, that could be how you lost that money, right? So 1, identify what type of trader you are. Are you better at trading trending markets or range-bound markets? And then 2, if you're a trending trader and you were looking to buy this and you made your money initially buying, how can you identify, what tools can you use to identify that the market is range bound and not trending? What was your power trade settings again? So for power trade settings on the Nasdaq, I have it at 400 contracts for 1 second. The ES, I have it at 2,000 contracts for a second. And gold is 400, crude oil is 400 as well. All right. Any other questions? We'll move to the ES. The ES, very similar to the Nasdaq today. The ES is actually the one I want to show that power trade on. There was one in gold as well. One second here. ES chart is up now. Pretty much the same thing. We know the ES and the Nasdaq are distant, close relatives, really. They mirror each other often. The same news affects them. Everyone's waiting in the ES the same way they're waiting in the Nasdaq to get these news prints. The ES, we had this gap down from last week that we kind of traded around, right? If I frame out this gap, that kind of set the lows for the day, for this daily session, right? You see these green here. We traded into this gap right around 50% of that gap. You guys will hear me talk about 50% retracements all the time. For whatever reason, I see them play out in the market enough that we talk about it all the time. It'll be sound like a broken record, but when you see something play out often, you have to go with what the numbers say. So switch back over to the power trades chart real quick, and here it is on the ES, and you can see I kind of have them framed out. I'll get into a little bit later why I pick certain power trades over others. There's a couple of different things I look at, but here's the one, and we'll frame this out. The levels are 53.52 at the low and 53.55 at the high. And we'll go back to the one up screen, and we'll see that framing out those levels gave us a really nice demand area. Now, you might not find your demands areas the same way, right? You might have just looked at the chart, right? If you're Dakota and you just looked at it and you said, you know what, this is a support, looks like support here, and you're not wrong, right? The reason I use volume is because I use volume in everything. So knowing that there were traders there that executed some size, right? There was 2,500 contracts bought at those prices in a 1 second period. I know that there's a trader there, right? So now when the market comes back to their level, I'm reading, are they defending that position? Are they even there anymore, right? Maybe they sold higher and they don't care about these prices anymore. But when price comes back, revisits, consolidates around their area, what I'm thinking, and of course I don't know, but I have to set some type of expectation or assumption for what I think is happening. Whoever bought here is still here, and they might still be buying. Maybe they're accumulating a position for PPI. It's an assumption, we don't really know. But what it is an area of opportunity, right? If I entered at the high of this range, maximum drawdown on that trade was about 400 bucks. And that's not to say that you'll enter at a perfect price, right? But again, same thing we saw with the Nasdaq, right? We have heavy negative delta, we have heavy selling. Maybe I bought it down here, right? But there's also the potential for this market to keep selling off. But if I frame out the heavy negative delta candle, right, that was the heaviest negative delta that we saw so far on the day, negative 696 delta in that candle. Once we get a close above it, there's a trade, right? There's opportunity to limit risk. Maybe I take a trade in this candle here, risking these lows where, again, I sacrifice trade location, but I have confirmation that the market is trying to move. And then, again, the reason why we frame out these candles all the time is because you can see how the market revisits it, right? This heavy negative delta here means there were sellers here. Not a coincidence that price comes right back to that area. Again, if you use volume profile, you'll see similar things, right? Value area highs and lows. Not a coincidence that we came back and visited those prices. Again, range bound day. We can do the same anchor of VWAP here. A little different than the Nasdaq. Here's our 3-minute opening range. VWAP left a little earlier, right? A little more angle on this VWAP, but as the day went on, it kind of flattened out and we just consolidated. So really nice opportunity. I'm not the best range bound trader. A lot of times I feel like I just see trends better. And when I review my trades, I find that a lot of my executions happen in the middle of the ranges, right? So I'm improving. That's something I need to improve with my trading. But I think it's important to know the market conditions, the conditions that the market are providing when we're trading, right? I can't step into every market and say, yeah, this is going to be a trend and buy it here and want to hold it, right? Or think that this is a breakout, buy it up here, and now I am, in a drawdown or hitting a loss limit. So identify what type of market conditions you have before you trade. We'll talk about exactly how we can do that. Coach Paul has, moving averages that he uses. I use VWAP. There's a couple of different ways to do it, or you can just look, right? If you don't like anything on your charts at all, you can just go naked charts and say, this is a consolidated market on a bunch of different time frames, set reasonable expectations for the outcomes of your trades, and then go from there. Can you tell us in detail about delta flow, especially the histogram bars? So Casa, good question. This delta flow indicator is something that I've found in Quantower that kind of aggregates a lot of the information that I'm looking for, where I didn't start using this until really about 4 months ago. Before that, it was reading time and sales, reading the DOM, identifying levels that the market traded, and then manually putting an indicator on the chart or a line on the chart and saying, hey, we had some orders filled at this level, pay attention to it. The reason I like delta flow is because what it's doing, it's telling you the delta in the candle, right? So was it heavier selling or buying? And then it's telling you the effectiveness of that delta. What does that mean? It's multiplying the delta in the candle, right? So this candle specifically, this is negative 2,700 contracts in this candle. Why is this delta flow indicator so high? Is because this candle had a huge range as well. So the delta flow indicator is multiplying the delta by the range of the candle, and the way I'm reading that is how effective was that selling, right? They were able to move price. Now, maybe I was able to get in a trade with these sellers here, and maybe I wasn't, but this is telling me that there's strong selling. We can see how, if I frame out this candle, this was 11:21 Eastern time. The candle kind of sets a range, right? Where when we pop back up to it, we know that there were heavy sellers in here. As we trade back up to these highs, that gives me an opportunity to limit my risk, trade back down towards the lows of these candles potentially. Maybe I trade around the 50% of the candle. So really good opportunities if we find where the heavy volume comes in. All right, any other questions on the equities, Nasdaq or ES before we move on? We're gonna go to crude oil from here and then on to gold. But if there are any questions, feel free to put them in the chat. We have wonderful mods that are sending me any questions that you guys do have. So let me know if there is anything. And again, thanks everyone for joining. And we will continue from here. Let's move on to crude oil. Completely different market. Completely different market in crude. Again, I'm going to start with a 30-minute chart. And I'm going to pull up, give me 1 second. Let me pull up Coach Paul's moving averages. Shout out to Coach Paul. The 20, 50, and 200 moving average are what you see on the charts right now. And the reason I'm pulling this up is because you'll see the difference. Here is crude oil with these moving average. The 20 is the yellow, 50 is going to be purple, and the 200 moving average is the white one. You can clearly see that we're in an uptrend. The 20 is above the 50, which is above the 200, and there's some clear separation between these moving averages as well. What we found is in trending markets, this 20 moving average is a pretty damn good level, right? Whether it be a support or a resistance, when the market starts to trend, you can kind of see it here. This is on a 30-minute chart, higher time frame, but really nice support at that 20 moving average. as opposed to the Nasdaq. We'll go back to it for a second. See the difference where we're kind of in a medium time frame uptrend, right? Where the 20 and the 50 are above the 200, but the 20 and the 50 are kind of braided around each other, right? Not that clear distinction that we have in crude oil, pretty flat angle, which again, indicator of range bound choppy markets. We'll go back to crude, completely different. And let's look at the Globex session open, which is 6 p.m. Eastern time, 5 p.m. Central, and here we go. So you'll see these faded lines on my chart. All those are different opening ranges. There's a Globex opening range, there's a London opening range, there's an Asian opening range, 12 p.m. midnight Eastern time, the New York session opening range. And I frame all of those out because the same way we trade the opening range trade in the morning for the New York session, we can do for the Asian session or the London session if you're trading it. But again, if we anchor VWAP to that Globex open, right? So session open, and we frame this out here. Same way I would trade a 3-minute opening range breakout. Shout out to Coach Paul. He might have actually taken this trade if he was trading crude. But once VWAP left that opening range, and it happened early in the morning, right? It happened at 5 a.m. Eastern time, 4 Central. So if you were trading with D, decent opportunity here where we see, again, buyers are in control based on this VWAP. It left the range, so it's telling us that they're at least trying, right? There's no guarantee that we're going to continue higher, but buyers are at least trying, right? That average price is continuing to go up. We see it acting as a support, not a flat angle like when we started here, right? I may be looking to buy it here, but the market hasn't chosen a direction yet, right? And if it hasn't, that's fine. Maybe you trade it like a range-bound market. But if you're looking for a trend to continue, once this VWAP leaves the range, it's an indicator that the market is trying to go somewhere. Right, we see it act as a support. This is 5 a.m. Eastern time. Here is 10 a.m. Eastern time, right? So we'll go down to a smaller time frame chart. Look at Coach Paul in the chat. He took the trade. I knew it. But here we go, acting as a support. VWAP acting as a support. Again, maybe you don't take the trade here. Maybe you wait for, we had prior to that, right? And outside of, this is not even the market open. This is prior to the market opening, right? We had some heavy positive delta here, which is a really good sign, especially in this trend. Some heavy positive delta, somewhat near the highs of what the day was at the time, right? We see some heavy buying. What I want to be careful of is making sure I'm not trading in the Shark Tank, right? So what does that mean? At this point of the day, we see heavy buying at what is the highs of the day for that time. I don't want to be the trader that's buying at this high. That's buying in the Shark Tank. I'm not trading an account that can push the markets. So I'm going to need some volume behind my trades in order to continue to push. You'll hear Coach Paul say it all the time. How close is your entry to volume? And what that means is we have VWAP all the way down here, right? We see how many times the market comes back and kind of checks this VWAP. If I'm buying up here, I'm buying 5 ATRs on a 3-minute chart away from volume. That's pretty far, right? In order for the market to do its natural fluctuations, there is a $500 drawdown on a one lot that I have to be okay with in order for the market to trade in a higher probability area. Does that mean I might have to wait for my trade to play out? Yes, but we're trying to put the odds in our favor. Maybe you buy it at the lows of where this volume came in, right? Where again, we're closer to VWAP there. Now we're only 3 ATRs away. We know that buying came in here, so maybe I'm buying with these buyers. I got better prices than whoever bought up here. But when I see this, I have to set reasonable expectations for the outcomes of my trade, right? On a higher time frame chart, I could look at and say, we're trading up towards 80. And we're going to go over an example in gold of why you want to set reasonable expectations, even if the market is going to do something else. But if I buy here, I know I'm at least in a better position than the buyers who bought up here in the right under $78, right? If I'm buying somewhere around 77, 75, 77, 85, I'm buying in a better position than these buyers up here. Worst case scenario, I can trade up to their position. If they're ready to continue to push and make money now, then we'll make money with them. But I've already have a trade that's in the profit, about 150 bucks here. Check. How's the volume now, guys? Is that better? Let me move the microphone closer to me. Let's see. Check. All right, hopefully that's a little bit better. All right, awesome, thanks. So again, buying at these highs is what we want to try not to do. It's hard, right, where we see the market trending, but how many of us would look at this chart and say, oh man, the trend is going without me, I have to jump in. Buy the highs, end up buying the high, and have to sit through a $200 drawdown before the market goes in your favor. If you can get your entries closer to volume, and obviously this is the best example of it, how often do we bottom tick trades that way? But it goes with the analysis that we were talking about, right? The market's in an uptrend, came back, checked VWAP, buyers are still protecting price, and it gives us an opportunity to trade. If you don't hit these lows, you could wait for a close above this candle, right? This is the candle that tested it. We know that buyers absorbed any selling that came in. It gives us an opportunity to limit risk at that point, right? If I'm buying a little bit higher, I know where I can set my stop based on market generated information, right? Not based on, hey, I can only lose 200 bucks or, I'm about to hit my DLL, but I need a trade to get me out of this. This stop is based on, hey, sellers tried to push the market lower. They met buyers at a technical level and pushed the market higher. If this is too much risk, right, it's $150 risk with a one lot, micros are available as well, right, where we can, manage our risk with trading micros, but using a stop based on market generated information instead of, your account. Can't try to fit the market into our accounts, it's way too big. But really just a nice trend up. What I thought was interesting is I didn't really see there wasn't like a huge push of volume. It was kind of just a gradual grind up the entire day, especially with what the news was. You would expect to see some volatile move, but it was just a slow grind up, which can be hard to get in, right? These markets like this can be hard to get into the trend, especially if we're talking about, how close is your entry to volume. At this point, we're getting away from it. The average price is under 78 here, and we are 10 ATRs away from volume at this point. It's a tough market to get into. It's not impossible, but you don't want to buy the highs, right? You don't want to buy the highs. As hard as it might be to do, you have to kind of sit out. If you get any pullback, this is when you'll see us measure pullbacks all the time on TopstepTV. Andre asked, hey Jay, what's the average pullback? Let's measure it. Here's a 17 tick pullback in Crude. Here's another 14 tick pullback. Here's a 7 tick pullback. 12 ticks. So that's about the average, right? Any 12 tick pullback that you see, that's your opportunity to join that trend if you wanted to do it, right? Is it a guarantee that that would have worked out today? No, but you're not buying at the high. You're going with what the market is telling you. And, most important, find a place to manage your risk, right? Where I can't get in this trend here. I can't join this trend here and say, my stop's going to be all the way down here, right? We traded up to $80. If I join at 79, if I get in at $79 and set my stop down here, it's an $860 risk. There's no guarantee at this point that the market continues to go. There's no guarantee. So take the trade, manage your risk, right? Repeatable setups, average pullback, take the trade. But we have to manage our risk because we don't get to choose when a trade plays out, right? I don't think anyone here has 100% accuracy trade. I forgot who was on the top the winning streak leaderboard. That seemed like 100% accuracy $1 trade, but we want to do a little bit more than that, right? So find a place to manage your risk, and shout out to you for that winning streak. That was awesome. But we traded up to $80, and the market closed. Crude oil closes right around 2:30 Eastern time. We traded to the major $80 level, and I got a question from Andre. What are your thoughts on $80 crude? So Coach Paul will tell you, Coach Paul and I have been doing Top at the Buzzer in Discord for the last 9 months or so. And anytime crude trades at $80, we call it the price that should not be mentioned. Because for whatever reason, $80 is a huge resistance. And then when we clear it, a support in crude oil. What I'm looking at right now, we traded $80. We did have some pretty nice buying coming up into that $80 level. This candle right here is positive 1,100 contracts right below that level. So there are some buyers there, but we didn't get the follow through right away. So what I would do is frame out this candle. And sometimes I'll use a little bit of discretion here, right? Where I'm using a 3-minute time frame. If I was using a 5-minute, these candles would look a little bit different. So when I see buying like this, right, I have this delta flow here where it's positive, but the one right before that, there was buying in that too. So I need to include that candle as well. What I want to see is the low of this candle is 79.48, call it 79.50, and the high is 80.12. The buyers that came in at 79.50, are they going to defend that price or not, right? Does that set a low where I can take a trade from there? And for me, I'm going to read the order flow when we get down there, right? If I see selling and they're not able to push price lower, that's an opportunity to take a trade back up towards that $80 level. But 80 is going to be a tough one to trade above. Of course, news can change everything, and we could be trading at $85 tomorrow. If we go to a higher time frame chart, we are okay. I'm going to go to, here is July 19th. And the first thing I pointed out, you guys might have saw it, but this heavy negative delta candle here, in a 30-minute period, there was negative 2,100 contracts traded. Look at where we rejected. So there were sellers there a month ago. So crude has a decision to make right now. Do the buyers hold this or do they continue to reject here? But that's about it. Yeah, that the low of that sell side imbalance is 80.19. That'll probably go on the Topstep daily levels tomorrow, or somewhere around 50% of that, which is at 80.66. And again, why am I picking that area? Because of this heavy sell side imbalance. We see last time, right? We sold off, we traded back up towards the highs of it. There was no follow through on that buying. And just like we talked about before, right? When we see heavy volume come into the market, that provides an area for us to limit our risk. And it was a nice sell-off on July 19th. Now, coming back to those prices, same idea. All right, Delta indicators are on the way for Topstep X. I know that is on the roadmap. Don't have a date for it specifically, but you can do a lot of this with volume as well. Like I said, I just started using this Delta flow indicator a couple months ago. Before that, I was just doing everything based on time and sales, reading the DOM, which you have available in Topstep X as well. Maybe you can pull up a volume indicator. I think what I'll do is when we do some of this chart analysis, and again, I'm going to always use Quantower because volume analysis is what leads my trading. But I'm going to do some examples of this using the volume indicator in Topstep X, so we can, same idea. So you don't feel handicapped by not having the indicator. You can still, do the same analysis. Probably make one more push into that zone before making any major decision. Yeah, Gabe, for sure. Right. I think we have to test here. 50% of this is what I'm going to be looking at if we trade into it, which is 80.66. if we start to see some candles close above that level, then there's a lot of room to the upside. I don't know if this gap is because of if this is an actual gap or that's just a data gap, but there's room above, right? There's room above. If we look at the moving averages, they're starting to trend higher, right? These are pretty sharp angles on these 20 and 50 moving averages. So crude can continue to go, and we know that news can expedite that. But first looking at this area, and then higher from there. We got about 15 minutes left. We're going to try to keep these sessions to an hour. Last one is gold. Gold trading back above 2,500. We have all-time highs, right? These are all-time highs, right? In gold at 25.23 on this contract. 25.22 and a half, close enough. And starting to trend up, right? Go back to a 30-minute chart and pull up the moving averages. Looks a lot like crude oil. Looks a lot like crude oil. I'll take the drawings off so we can actually see what's going on. But this looks a lot like crude, right? 20, 50 moving average above the 200. Again, shout out to Coach Paul for these moving averages. I don't keep them on my charts, but when I'm doing market analysis and prep, it's one of the first things I look at. Tells me what trend the market is in. This looks almost identical to that crude oil trade, right? Here's the Globex open. Delete all those drawings. There's the Globex open. When we anchor VWAP to that and we see VWAP leave the range, trend up. Trend up. It starts to be supportive somewhere around 1:30 Eastern time last night. I'm not awake at that time to trade, but when you wake up and you see this trend beginning, we'll go to the New York session open, and gold opens a little bit earlier. I actually had a gold short last night. Let's talk about that for a little bit, because we did talk about setting reasonable expectations for the outcomes of your trades. I was watching Dakota on slow markets, and give me 1 second. Let me see if I can pull up this gold trade. Let's see if this works. All right, there we go. Traded a couple contracts. So I took a gold short because we had the Globex open 30-minute, and you guys know I like 50% retracements. We kept rejecting at the 50% of this Globex open, and when I see that, I have to take the trade, right? There's not enough buying to push us up. VWAP is pretty flat, which tells me, range bound for the time being. I took the short. Took it initially and got out for a small profit because I wasn't seeing, the selling that I was looking for. But then again, got better trade location, traded it with the 2-lot. This is just on a combine. I was on vacation for the last week, so I'm not trading any, real money accounts right now. My personal account just sitting there chilling right now, and maybe for the week with the news we have coming out. But rejection at this 50% level and a nice trade, right? This is a 2-lot trade that I was able to take. It is $740 in 25 minutes. There was potentially more, right? I think at one point the trade was a little over $1,000, but I wanted to give it the room to trade because like we talked about in the Nasdaq, right? There looked like there was more room lower. Just because there looks like there's more room lower doesn't mean that there's more room lower. And what's going to tell me that? The volume is going to tell me that, right? We have, some pretty nice selling come in here. We have this heavy negative delta that brought us out of that Globex range. But look at where VWAP is. So price went. We had some sellers here, but the VWAP didn't go with them. The VWAP never left that range, although price did. So what I'm seeing this is as trap sellers. The way I manage this trade, the way I, manage a lot of trades is here is that heavy selling, 50% retracement. What I said is as long as we close, and these are 3-minute candles, as long as we close these 3-minute candles below that 50%, I'm okay. You can see where my exit was. As soon as we got a candle close above that 50%, I was out of the trade. It continued to go, but if we look at the delta numbers now, positive 18, positive 19, positive 32, there's no selling here, right? So if I want the market to go lower, I can't be the only one, right? Somebody has to come in here, sell it, and actually get what they're looking for, or eventually sellers become buyers. We're gonna go back over to the, give me 1 second. Let's go back over to the power trades chart real quick. And last thing I'll show on that, let's see. Here we go. So here's a power trade here. This is from August 9th, 9:30 Eastern time. There was some big buying that came in here right around this 24.63, 24.64 level. Switch back to where my trade was. I don't even think I realized this until afterwards, but look at where we rejected. Right around where we know those buyers came in before. We can see where those buyers came in before. Anyone think they're still there? Right? Whoever was buying here is still buying here. And they got what they were looking for, right? We continue to trend. Again, same idea, how far we could join this trend, right? If I held on to this trade thinking that, I was right and the market needs to keep going down, for me, I do constant assessments of how efficient the market is doing what I expect it to do. If it's not efficient, it's okay to just cut the trade, or find a place to say, you know what, if it gets back to here, I want to get out. Because I was wrong on the direction. You don't have to be right on the direction in order to make money, but you do have to trade right. Coach Paul quote, shout out to Coach Paul. That's my guy. You'll hear me mention him a lot until we get him on here, but you don't have to be right, you have to trade right, right? I think I traded this right. I was not right on the direction. In the same sense, I could have been right on the direction here in this trend and bought it up here, been right, but traded wrong. What's the issue that, buying up here has? How far is your entry away from volume? This is almost 6 ATRs away from where that volume indicator was. This was at 1 o'clock Eastern time. You were right on the direction. The market did its natural pullback. Where did it pull back to? Right to volume and bounced, right? So when you go through your trade review, make sure you're paying attention to where your trade locations happen. And it's not going to be something that you fix in one day, right? I still think about it myself, right? Anytime I take a trade, I think I took a trade on TopstepTV 2 weeks ago where I was just like, you know what? I'm not comfortable with this trade because it's so far away from volume. It's going to happen. We're human. But assessing where your trade location is in the moment, assessing how the market is doing, can keep you out of bad trades, right? You don't have to wait till a trade hits your stop loss. If you realize it's a shitty trade, it's a shitty trade, right? Just get out of it. And you could always find better trade location. We've got a couple more pullbacks towards that VWAP. Again, market getting extended. We're nicely above 2,500 though. What I thought was really interesting about this whole gold move, Delta, and Hogue, if you're in the chat still, if you can confirm this on your side, I have negative 8,000 Delta for the day in gold, which is strange. That's a lot of selling. It's pretty much selling all day, and a really nice uptrend. So a little bit of a divergence there. We'll see what that means going into tomorrow. We are near all-time highs. Again, we have PPI, CPI coming out tomorrow. We're not that far from all-time highs in gold. We are less than one average true range day, less than like a quarter of an average true range day away. Yeah, we're 10 points from the highs. Yeah, Coach Paul, you see the question marks, very confusing, right? I don't think it's a rollover thing, right? I think that's over with. So I'm not sure why we saw so heavy negative delta, but it's a big divergence for the move that we have. Tachi, you says I have negative 8K for gold delta. RTH delta is negative 6,000. So yeah, very interesting, very interesting. That's a lot of trap sellers for this price action, right? This is an above average range day, and we had huge selling. So we will see what that means going into tomorrow. If I have any levels in gold, let's see. And what I'm going to do real quick is just, you'll see it come up on the chart, but I'm going to mark out any power trades that happened. Of course, we had a buying one around 2,500. Outside of that, I'm not seeing anything else. There's one here, 24.95. There's another one there. I'm just kind of freehanding these right now. And going into tomorrow, I'll do a little bit more analysis about which ones I think will actually be important levels to trade. But some buying at these highs, buying above 2,500. Not convinced buying that you would expect to see on such a trend day, but interesting nonetheless. All right, so we got about 4 minutes left. I do see another question from Nick said, question, when you say ATR, is daily ATR or 3-minute ATR or 30-minute? Great question, Nick. So I pay attention to all of them, right? For the daily ATR, I'm using that for potential levels, right? So the way, if we look at gold again, let's say this is, I'm plotting levels for the day in gold, and I'm plotting last Friday. At the time that I do my levels, right, and I'm normally doing them around 7:30 Eastern time, so about an hour before gold opens, I'm gonna find where the high and the low is for that session. And there's indicators that do this. I don't know why I do things manually sometimes, but I'm gonna find out what the high is, know what the ATR is, which is 45 points, and then I'm going to measure 45 points and put an alert there, right? So if this sets the high for the day, I have a daily ATR. One full daily ATR move would bring us to this level. Now I'm probably going to have levels in between that as well, but that's going to be one of the levels that I put on the chart, and then I would do the same thing to the upside. For the 30-minute chart, I'll pay attention to that as well. But when I was talking about how far is our entry away from volume and how many ATRs, that's on a 3-minute. Why I use the 3-minute is because the 3 minutes where I execute my trades. So I want to know how far on my execution chart we're away. But use whatever time frame that you trade on, right? If you trade on a 30-minute, try to identify that. What's going to happen on a 30-minute though is you're going to have a lot of times where, let's see, let's do Globex open, anchor. 30-minute ATR in gold is 3 points. Here we're 2 ATRs away. So you could do it on any time frame really. At this low here, we were less than 1 ATR away. So you could do it on any time frame. How do you read ATR on TopstepX? The same way. Let me see. There's an average true range indicator on TopstepX. And let's pull it up. It should give you the same values, right? Let me pull up my TopstepX charts. You guys should see this here. And here's the indicator here. So same idea, right? Really, on my quant hour screen, you didn't see the line because I don't really care about the line. I just want to know the value. So here we go. I'm just following this line. This is at this point on a 30-minute chart, the average true range is 4.4 points, and just continue from there. The ATR on TopstepX is not easy to determine. Let's try something real quick. Where is that indicator? Let's see if we can change this to columns. Maybe that's a little bit better, right? Where it's not a line, you can actually just, hover to the top of it. That might be a little easier to read. Yeah, I think I like that better. All right. Any other questions that we have? We went through all 4 markets for the major markets. Again, crude oil, which was our biggest percentage mover, up 3% today. Watch out for crude tomorrow. We might get, just some continuations of that range, maybe a retracement of it. But a lot of times those big percentage movers do provide really nice trades the following day. So Any other questions? If not, we'll probably go ahead and end the session soon. We do have classes still going on in Discord. Coach Vince Coach Ray goes first. Coach Ray at 6 p.m. Central, Coach Vince at 7 p.m. Central. And then, of course, we have Dakota with Slow Markets on YouTube. When does he start? 7:30 Central. Deanna for the London session. So a ton of content. Thank you for whoever joined today. Thanks for hanging out. I understand what Dakota says now about asking to hit that like button. It feels a little weird, but go ahead and hit that like button if you did like the session. It helps me out. Any feedback that you have, hit me up in the Topstep Discord, and we can, talk about it there. We'll continue to grow this session. Like I said, I'm eager to get Coach Paul in here and have some guests as well. What we want to do with this is, anytime there's an earnings report to come out, we can, we'll talk about it. How might that affect, the following trading day? But if there are no other questions, thank you everyone for joining. The first at the buzzer on YouTube. Look forward to doing this again tomorrow and through the rest of the week. And if I don't talk to you, trade well, manage your risk, and we will see you soon. Thanks. Bye.